This is another episode of me documenting the day-to-day process that I'm taking to achieve long-term consistency in the financial market. Today, I finished the day green, but I finished the week down red, which is frustrating. But honestly, I'm pretty proud of myself for the way that I performed this week, given how hard this week was for me and all the mistakes that I made. I've seen a lot of progression in my ability to prevent myself from making mistakes that lead to a lot of drawdown this week. For example, Thursday should have been a pretty large losing day based on the way that I trade, based on how I got the market approach incorrect. But the thing is, this condition that we're experiencing right now, I have not yet adapted to. And it's the slow grind all-time high condition that has gotten me my ass handed to in the past because I'm just not adapted to it. I keep thinking this just doesn't make sense to see the market keep going higher. So what do? I come into each trading day looking for a sell side low resistance liquidity run. I'm looking for the market to break lower with speed, and it just keeps slowly grinding higher, which is extremely frustrating. If we go to the chart, go to a daily chart, we can see how many consecutive days we have had an up day without the market taking a previous daily low. We have not taken a previous daily low in 1, 2, 3, 4, 5, 6, 7, now 8 trading days, which is crazy, right? So usually when the market does something like this, I'm kind of looking for a move like this, but it has not been delivering that, and we just keep going higher. So conditions are changing, and we have to adapt to that. And a lot of you guys in the comments are also telling me that you are having a hard time in these conditions, which I can totally agree with. This shit sucks. It is ass. I mean, look at the 1 minute. Us lower time frame traders, we're looking at this shit like, damn, this is fucking ass. Look at all the back and forth. Boom, 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 boom. Like, we don't want to trade this kind of market. It's rough. And it's the same condition that it was yesterday and the day before that and the day before that and the day before that. So this week has just been terrible. But let's get into today. So before I go into my process and my systems, I am now a Tradezella affiliate. So if you use my link to purchase a Tradezella subscription, you can help support me, help support the channel. You can also use code CF10 for 10% off of 12 months or CF25 for 20% off once. So just throwing that out there. I wouldn't try to sell you anything that I don't believe in. All of my systems and processes are integrated into Tradezella. And if you purchase a subscription using that link, let me know, and I will walk you through all my processes and systems that I have integrated into Tradezella and help you get started using it, kind of walk you through it. I think that would be a fair trade, right? But today, how I felt, this is the optimal market approach. This is a template that I use each and every single trading day in Tradezella. How I felt, well, I knew the condition was not optimal for the way that I trade. It just keeps pressing higher, which is what I just talked about, right? Pretty frustrating. And I keep swimming against the tide because it makes no sense based on the way that I trade. So based on the way that I trade, I'm constantly looking to fade the market to look for a low resistance liquidity run. And the idea of the market just keep going higher, keep grinding, not taking any lows just does not make sense to me. So I'm getting in the rhythm of this does not make sense. So I do nothing but try to fade the market. So I thought the draw was the London low. And for the higher time frame narrative, price has gone higher all week. There's nothing in price for price to grab onto and climb higher overnight or in previous daily range. And the market criteria is perfect for a sell side low resistance liquidity run, but the higher time frame narrative is not there. And that is what's key. The market criteria that is present is contingent with the idea of lower prices. Thinking about it though, in hindsight, it kind of wasn't. But the higher time frame narrative is not there. In order for me to frame a high probability bias, I had to have a higher time frame narrative and market criteria, put the two together, and that makes a solid bias, a solid market approach. So if we go to my 15-minute screenshots, you see how all this is just like one smooth edge in price, right? It's just a trend line. Now, typically with the way that I trade, if the market has a gap up opening, see the black line right here? That's where we settled yesterday in regular trading hours, and where we're going to open today at 9:30 is at the high of day. So typically when the market leaves a smooth edge like this, and we have a gap up opening, and we take the previous daily high, we tend to trade up right at 9:30, fail at the high of day, and then fill this gap. That's one of the playbooks that I have. Now, why this didn't deliver today was, well, we have market protraction right here, right? That takes out this low, and then we have an impulse swing higher. Now, I thought there was nothing for the market to grab onto in here, But we do have the new day opening gap and the opening range gap that it actually did grab onto. So playing with higher time frame narrative, knowing that yesterday was a solid up close candle on the daily time frame, and the market is in this slow grind up condition, reaching for the all-time high, and it's settled near the high on the previous daily candle. That's a sign of strength. And then what do we do in the overnight session tonight? We basically have this consolidation range, right? And I don't think there's anything for the market to grab onto, but there is. We have this new day opening gap here, and we also have the opening range gap. So if we go to regular trading hours, toggle it on, bottom right hand corner, you see I toggle it on and off like that. Where we settled yesterday in regular trading hours at 4:14 Eastern Standard Time was here. And then we had a gap up opening. We gap up from where we settled yesterday at 4:14. At 9:30 today, the opening price today at 9:30, gap up, the market trades down, fails to leave the opening range gap, and then we see a push up towards the all-time high, which is the draw in the higher time frame. Now I thought that the market would fade all this smooth trend line in here, because it's just, there's no solid discount arrays in here for the market to grab onto. Now in hindsight, I'm literally noting this right now. I can see we have this inversion fair value gap. Boom, right there, and it does not trade to the midpoint of that, which is a sign of strength. But if we go to the 1 minute, we can see that it never leaves that opening range gap, does it? So the blue lines are the new day opening gap. You can see how the body literally stops right there on the new day opening gap. It never leaves it. So that's a sign of strength. It does the same thing for the opening range gap. It's respecting both of those gaps. So although there's nothing in the candlesticks for the market to grab onto, we can look beyond the candlesticks at other PD arrays, such as the new day opening gap and the opening range gap, and we can use those to grade the strength and weakness of the market, because we can see that on the 15-minute time frame, the bodies of all these candles, they trade down into the new day opening gap, but where do they close? They close above it, which is a sign of strength. And these are the things that I use to confirm trade ideas, to confirm reversals. Now, what I was looking for was a break right at 9:30, because with the playbook that I trade, and given that the economic calendar shows a 10 o'clock high impact driver, I know that on days with a 10 o'clock high impact driver, either the move is going to come right at 9:30 or it's going to come after the 10 o'clock driver. In this case, it happens after the 10 o'clock driver. The favorable move, the market started to get real liquid and start to move efficiently after the 10 o'clock driver came out. And before that, it was a big mess, right? But we can see that where the market formed the low of day in the morning session was in the first 10 minutes of market open. So on days with the 10 o'clock high impact driver, it's going to come really fast into the open, or it's going to come after the 10 o'clock driver. So in this case, we could say that the move actually happened or started before the 10 o'clock driver, because we had this low formed in the first 10 minutes of market open. So if we have a high impact driver, I'm looking for a reason to anticipate a reversal in that first 10 minutes of market open. I'm looking to get on like this. If it's not there, and if the market's extremely high resistance, then I'm going to wait until after that driver comes out. But what I was looking for today was the market to open, trade up, fail at the high of day, and then make a run against all this smooth sell side that we have in here, all these smooth lows. I was not thinking that there was anything for the market to grab onto in this impulse swing higher. So I'm thinking it could potentially run all this out. And I was thinking we could draw for the London low. So if you go to the recording from this session right here, you can see that the trade that I executed today. Now, the best part about it is I do not have to be right to make money, right? Even though today was a small winning day for me, and it wasn't even enough to cover the loss that I took earlier this week, I didn't have to be right about the direction of the daily candlestick in order for me to make money, because of something called partials. Ever since I implemented the partial profit taking system, all it does is take pressure off of me to be right. I don't feel the need to be right about the direction of the daily candlestick or be right about my bias anymore, because I'm locking in equity when the market gives it to me. And because I'm doing this, I don't have to be right? So the first thing that the market does at 9:30 is open it, trades up, makes a new high a day, fails. Now I'm noting how the 1 minute candlestick traded up, cleared the high a day, but it closed below it, still inside this inversion fair value gap. That's a sign of weakness. So now I'm grading the premium wick that it has left, seeing if the market can trade to the consequent encroachment of that, because if it can't, that's a sure sign of weakness, and it cannot. Now I see this large down candle that has crossed the opening price of that up close candle, which I know is a change in the state of delivery because it has removed liquidity from the marketplace. This up close candle has removed the buy side above these highs. Now the opening price of that is violated. I know that's a change in the state of delivery. So my sell limit order goes there. I don't even have to wait for this candle to close because as soon as that open price is violated, that's a change in the state of delivery. So I know it's a high probability change in the state of delivery. My stop loss is going to go above the midpoint of this wick. I risked over 16 points on this trade, a little over 16 points. But the market does end up breaking, and I'm thinking, okay, I'm trading counter trend, right? I'm not really confident in this idea because it's having a really hard time breaking lower. I need to find a level that's solid for me to get out and lock in equity to completely remove the stress and the need for me to be right on this trade. So a good level for that would be previous day settlement or the opening range gap low right here, right? The opening range gap low. I'm going to take the new day opening gap off so we can see better. Okay, so my object tree is just broken right now. Okay, shout out TradingView. I'll just go ahead and hide it. But usually when I have new day opening gaps is I'll make a folder and I'll put it in here. But we can't see it right now because it's literally just broken. Okay, so it looks like this is also broken. Nice. Shout out TradingView. So it looks like we're not going to be able to do that. It's fine. But you can see how market never leaves the opening range gap, right? So as it's driving into that level, I'm watching to see, does it leave that level with a strength? Does it just run right through it? Or does it have a hard time leaving it? And I know how I feel about this idea. I'm not 100% confident in it because I am trading against a higher time frame. But I'm following my playbook. The only thing that's missing is higher time frame narrative, which is why that drop down does not last. So I know that I need to secure equity on this trade as soon as I possibly can. So as the market is driving into the opening range gap low, which is where we settled yesterday in regular trading hours, I'm going to go ahead and take off, which I do. For me, it was not worth it to see if it could run past that. I'm just going to go ahead and lock in equity. Just completely remove all the anxiety, all the stress that I feel about the idea, and just lock in. Lock in equity. So boom, I trimmed 2 out of 3. Right. Come on. There. And then I get stopped the remainder for break even because I was incorrect about the direction of the daily candle, which is fine because at 2 out of 3 contracts, I'm up. Now it's not enough to cover my drawdown that I incurred earlier in the week, but it's still something, you know, and I'm not finishing down $200. I was not able to recover the drawdown from this large losing day, which makes me think about things that I could do to minimize drawdown. The reason that I had a losing trade here was because I executed before I even got confirmation. I executed on this up close candle right here, and you can see that it shows me my executions right here. So if I apply the layout that I'm looking for, or the one that I use, this was never a change in the state delivery, but I'm buying that. So it's just simple things, simple mistakes that I can extract a lesson from and move forward to make me a better trader, remove the likelihood of me incurring drawdown and taking losing trades by studying my losses and getting better and learning from them. But I basically finished this week break even, only down 5 points, but I still finished lower than when I finished last week. I would like to have made a new equity high on the account, but I'm down about $30, $40. So it is what it is, you know. This was an extremely rough week of trading for me, and I think the main reason for that was because I took Monday and Tuesday off because we had CPI on Thursday, PPI on Wednesday. Monday and Tuesday did not have any injection of volatility, and by that I mean there was nothing on the economic calendar on Monday and Tuesday, so I know those trading days are going to be less favorable, right? So I'm literally just not even going to trade them. I don't ever trade Monday with no news driver because those days are 9 out of 10 times shit. So I'm just completely eliminating that. Now, Tuesday probably could have been a day for me to actually do something. It wasn't terrible, but it wasn't necessarily good. Let's go back to Tuesday real quick. If we go to Tuesday at 9:30, like we had this huge drop down. The opening range was very high resistance. I would have just have to frame a high probability bullish bias. We have a change in the state of delivery here. You can buy the low a day and take it all the way up here. That could have been a solid trade. We had this really nice swing on Tuesday that I sat out of because of the economic calendar, which I'm not really upset about. But the remainder of the week was rough. It was really rough for me, at least, and for the way that I trade and my model and things of that nature. So that's it for this week. It's not terrible. I'm not proud of what I did this week because every market approach that I had this week was, I believe, incorrect. I have to go back to my daily journal and see. So I add these tags so I can go back and quickly reference basically what that daily session was like. Like, for example, I have this tag right here, right? So my bias for the day was bullish and I was incorrect, and this was the playbook that the market actually offered. So I was bullish and got it wrong, and it actually presented my sell setup. Yesterday, I was bearish and incorrect, and it actually presented my buy playbook, right? So you can see that it literally did the exact opposite of what I was looking for Wednesday, Thursday, and now Friday. So I've come to the market and I have gotten an approach incorrect on all 3 days. Like, for example, today I was bearish and incorrect and offered my buy playbook. So now these are things that I had to go back and study and reference. Okay, why am I getting my approach wrong? Well, I can go back here. I can go back here to each trading day. I know exactly what I was thinking before that trading day. I know what I was thinking with the annotations and screenshots. And I could connect the dots, connect my thought process, and do an analysis of, okay, when the market typically shows up like this, I'm looking for a sell side low resistance liquidity run. I'm trying to fade it, but it doesn't make sense to fade it because of this, this, and this. So that's something I'm going to be doing tomorrow for my weekly review, and I'll upload a video on the weekly review as well. But I've gone into the market getting a market approach incorrect all 3 days, and usually when I have a week like this, it's a large losing week, like last week or last month. See, I had a week where I went to the day with an incorrect approach all 3 days, and I got killed. But since week 4 of August, we look at things in terms of our multiple, not dollar amount. I haven't even been trading that bad, right? This is my first red week in 4 weeks. And I'm not even down that much. I'm basically break even. So I would say I'm still a break even trader at this point. You can see my daily net cumulative P&L. It's slowly rising. We're getting there, right? We're getting there. I would say I'm on the edge of profitability 100%. I would say so. Just keep working at things, just keep reviewing, keep grinding, and keep getting better. And that's it. And that's all you can do. Now, one more thing I want to mention before this video ends. I am going to start a YouTube membership. I think I've officially decided that I'm going to do this. But I'm basically just going to put all my resources in there, everything that I've learned throughout my trading career, all the things that I've done, all the processes that I've built, all the systems that I've built, all the steps that I've taken to get me to where I'm at right now, where now I have a process that is repeatable, and I know without a doubt that I'm going to become a profitable trader. It's just a matter of time. I'm not even a losing trader right now. I'm a break-even trader, and I'm about to break out of that cycle. So I'll probably just like lay out all the steps that I've taken, all the things that I've studied, all the notes that I've built, all the systems that I built, all my notes that I have in my playbook. Like, for example, this page that I'm working on right now in a Miro board, and this is all free as well. Like, you guys can do this as well. But I'll probably post like all the processes and things that I use in that. So to help you guys out, you know, because I know I have some traders that watch my YouTube videos that are new and kind of see these videos as inspiration, which is good because that's my sole intention behind this YouTube channel. I just want to put you guys down the right path and let you know that, yes, you can make this shit work. I want you guys to see me, that I made it work, so that you can believe in yourself, that you can do it as well. And that is the whole intention of this YouTube channel, which is why I would like to create a resource of all the processes and the things that I've used for you guys to use. So, a mutual benefiting relationship, right? I benefit, you benefit, boom. Everybody gets better, and that's how it works. So that's going to be it for this one. I'll talk to you tomorrow with a weekly review.